Welcome back to the Loveland Report and the Lone Arranger radio show. Bruce Woodburn, Cross Country Mortgage. I am the Lone Arranger alongside Cleve Loveland, the voice of real estate in Orlando. Thanks for joining us today. If you'd like to reach Cleve, reach him right now at 407-352-8118. If you have questions or you'd like to apply for a mortgage, call the Lone Arranger right here in your backyard. 407-250-9144 or webringyouhome.com. If you get my voicemail, it's because I'm on the air. I'm with a client. I will call you back. I promise. I wanted to talk first about PMI. So with rates dropping, a lot of people are in a position to get rid of PMI. But some people that want to buy, they don't have enough money to put 20% down to eliminate PMI.
PMI is a good thing. It's
PMI,
a necessary evil.
Yeah. PMI is a great thing because otherwise, if everyone had to put 20% down, there would be very few people who would own homes and they would control the market, right? So PMI opens the market up. When you ask people, do you like PMI? And they're like, I hate PMI. I'm going to wait till I save 20%. You are a fool if you're going to wait to save 20%. PMI, and the better your credit, the lower it is. Mm-hmm. However, I've got loan programs that are conventional loans with as little as 15% down and no PMI. Now, I can do 10% down and we can do single premium PMI, which is really good, especially for buying a second home. But a lot of people right now, they already have a mortgage and they're thinking about refinancing and just getting rid of the PMI. Even if the rate didn't go down that much, the PMI doesn't go toward principal.
So at what's PMI average on a conventional loan?
Well, that depends on what your credit score was and how much you put down, because it's a wide range.
$200 or $300 a month on a
It could easily be $200 or
$300
$300 a month. It could be as low as $75 a month, and as high as $400 a month.
And that's conventional. Now, FHA has some set PMI on it, isn't it?
They do. It's
a little bit lower rate.
1.75% up front, which is added into the loan, and then 0.5 percentage monthly. Yeah, that's right.
So, you can't, that's a lot longer time frame to get rid of that.
You're almost never going to get rid of it. You're going to refinance.
You got to come out of FHA into
loan.
Conventional.
Yep.
All right.
But a lot of people, like right now, I got folks call me. They're like, I got a 3.25% 30-year fixed rate. How do I get rid of my PMI? Well, you're going to have to refinance. You're not going to get the 3.25. But you may be able to get your rate down into the 4s, and then you're not paying any money toward PMI. You got to remember the PMI isn't helping your principal. So getting into a home with PMI, not a bad thing. If you were able to refinance and still pay PMI, maybe you can lower it, because the more value you have in your home, the lower your loan to value, the lower the PMI. And then of course you don't have to have it at 20%. So there's a lot of options. And then I'm getting a lot of self-employed people. So 1099 has always had to follow the same rules as self-employed. 2 years tax returns, and you're going to look at your tax returns. You're already writing off everything, and that's what's causing people that are 1099 and self-employed to not qualify. So I have a 1099 program. You bring me your 1099. You have to have been in business for 2 years. I will use 90% of your PMI or your 1099 income. 90% of it. Self-employed. Look at self-employed. You're writing off everything. I know where you're writing off everything. You have the creative accountant. So banks won't touch you. I will help you. I have a bank statement program. Bring me your last 12 or 24 months bank statements. We'll average the deposits. I'll give you 50% of that is income per year. So phenomenal program. And then DSCR, debt service coverage ratio. There is no income needed other than the rent from the subject property. So if you fit into one of those categories and you want a lender that has all these products in-house, I don't have to go to some other bank to do this loan. Everything's done in-house, not multiple credit reports like a broker's going to pull for you. All you need to do is call the Lone Arranger. Matter of fact, on my programs, I start off with a soft pull, so I don't even affect your credit at all.
Well, and I think people need to take control of that. Just like I can help them with a real estate plan. You need to go through that, because you can actually help them improve their credit rating.
Every day I help
and
people
get them.
with that.
I mean, you change that by, if they're on the cusp of having a better rate at 720, you can help them with that, or whatever the break points are.
You'd be surprised at how much better your rate or your PMI gets every 10 points you cross that threshold. So, for instance, 729 is a different score than a 730. And a 739 is a different score than a 740, all the way up to 760. Over 760, everyone's the same.
They trust you.
Yeah, that's right. Now, when you pull your credit on Credit Karma or your credit card, your score is going to be about 35 points higher than a mortgage score. Just be prepared for that. It's going to be about 35 points.
What the app says. Yeah.
That's what the app says,
work,
right?
Yeah.
Listen, for the best lender in the country, right here in your backyard, and I'm just telling you the truth, I don't know anybody that runs a better shop than I do. Call me now, 407-250-9144, or webringyouhome.com. Cleve Loveland, 407-352-8118, or lovelandreport.com. Hey, listen, I recently have lost 62 pounds. I went to a place called Age Rejuvenation. And listen, I want to tell you, if you want to lose weight and you want me to help you, I can get you huge discounts on weight loss with your Ozempic or your Manjaro. Just call me at 407-250-9144 and I'll help you.
All right. I've got some articles here talking about, I deal with landlords every week, and we manage a bunch of properties at Loveland Properties, and I help people take the headache out of it. And my property management, my landlords, they are pretty much passive owners. I mean, I don't bother them. I call them and say, hey, what's our plan? Are we going to renew the lease? Are we going to sell? What would you like? Would you like to buy another one? Is it time for a 1031 exchange? And I go through that with them, Bruce, but they are not in the day-to-day operations and dealing with the tenant who's late, dealing with this. Now, the main thing, this is really interesting. When the most mistakes are made is when somebody's moving into the property and they are not vetted correctly. And the main thing you're looking for is income. It's just like qualifying for a mortgage. You got $2,500 a month in rent. I'm looking for 2.5 to 3 times that in income, verifiable income, or a massive savings account. I'm looking at it's kind of a soft, like you call it, a soft credit report, tells me they got bad accounts and collections.
That's right.
And then I'm looking for the last landlord. What's the last landlord say? And it's funny. You wouldn't believe the number of people fill out an application and they don't put the last landlord on there. Well, that means there's usually a problem, so what was it? That kind of thing. So, and we go through all this, and knock on wood, I've done my percentage of evictions over the past 30 years of me handling investment properties is like 0.1%.
Right.
And typically the important thing is the time lost. If you get a bad tenant, it's to get them out. And an eviction can take you a month or two. And so they fight it, can go longer. But the main thing is spotting the problem up front. And somebody that doesn't keep a house right, we do inspections. We find out that, all of a sudden the boyfriend moved in because he became the fiance. Okay, great. He's got to get on the application, because if I went to evict that tenant, you got a squatter. Basically, the boyfriend's a squatter. All these things that come into play, all these problems. Now, knock on wood, we don't have a lot of these problems, hardly ever, because of the screening process up front. And it's just like qualifying. But you don't want to be, I talk to so many people like, oh yeah, the guy pulled up in a brand new car and he gave me 2 months cash, and that's the last dime I ever saw, and then they're hiring an attorney for an eviction. So if you have property that you want to manage, call me at 407. You want me to manage 407-352-8118. We'd be happy to help you with that and work on your real estate plan. Let you know where you stand each year. Let you know what's going on with the rental market, what's happening with your investments.
All right. Yeah. So, hey, listen, with rates dropping, are you finding that there's more buyers entering the market from you? Because my business is picking up considerably.
We've gotten more calls, and I've got more agents out there snooping around. The main thing I'm doing with agents, I talked at the top of the show about co-broking or not co-broking. We are co-broking everything. And so
tell everybody what that means.
Well, if you've got a realtor, now you've got to hire your realtor. You got to sign a contract that says, I'm going to pay you to be my realtor, and then some sellers might say, hey, I'm not going to pay the buyer's realtor. And now here's the funny part, Bruce. They don't lower their price by 3%.
No,
they're just being greedy. And, pigs get fat, hogs get slaughtered. The pigs, they're going to get their house sold. But most of the brokers I'm talking to are still co-broking. And you don't want to skimp on that. When the builders are paying 3 or 4%, and
why are you going to pay 1?
You try and offer 1. All you do is just complicate that deal. And if that
lose the buyer.
Yeah. And the buyer's only got 20 grand to put down, their FHA, and they barely got enough for cost, or 25 grand. They don't have the 10 grand to pay the realtor. They can't show that home. And that's not anybody's fault but the sellers. So the system has worked for 110 years. The government stuck their nose in it and forced us down our throats. I'm not happy with the
I don't know who it was, but I think it was attorneys that got
they did that, and the DOJ was right behind them saying, yeah, this is wrong, because it's a bad thing.
So it doesn't mean that anything's changed. It just means the way it's presented.
It is. It's an MLS. It's not an MLS anymore. All the realtors got to do is text me or call me, And if you see a Loveland Properties listing, we are co-broking.
Yep.
I will not take somebody that says I'm not going to co-broke.
You can just assume if you're a realtor out there that Cleve Loveland's listings are going to pay you. Absolutely. Yep. And you're right, because a builder will pay between 2.25% and some of them 3% plus bonuses to bring buyers in. So why would I want to buy resale when I can buy new construction or show new construction as a realtor? And a lot of realtors are so afraid of this NAR settlement that all they're doing is showing new construction, which I think is also a mistake, because there's a lot of great value in resale out there. Would you agree with that?
There is. I mean, because you can find something that somebody just got transferred. They got moved from here. They bought the house 3 years ago, and it's gorgeous. And I've seen some resale homes that are gorgeous. The people take great care of them or spend a lot of money renovating them and keeping them up. So it definitely, because new constructions, I want to say it's only with what sells, they're only about 25% of the market out there. Actually, probably less than that, because look at the heart of Central Florida. There's not much in the metro area. There's not a lot of new construction.
Right.
There's infills. There's people that knocked down a house or tore the roof off and redid that as a new home. But there's very few properties. I mean, you're at $1 million plus on those homes. You don't see many of those coming on the market at $599 because of the cost of the land. So definitely want to look at resales. You always want to look at resales, because I say, I want something new. I don't want to mess with it. There's all kinds of people that take care of their home.
A lot of people think they want new construction until they realize the strictness of some of these HOAs. Some people don't want an HOA. The new constructions generally don't have a lot of land. Now, listen, if you want to go out in Bartow or Lakeland or Frostproof or, Lake Wales, Sebring, Southern Homes has properties, and they've got bigger lots. And these homes can start in the 260s and go up into the 700s. So you want all your closing costs paid? Call me, the loan arranger, at 407-250-9144 or webringyouhome.com. I'll connect you with the right builders. Cleve can show you. You don't pay Cleve because the builder's going to pay him when you go find a new construction, and he'll negotiate it for you. Or if you're looking to buy a new home or like an existing resale, listen, his agents will find the sellers that are co-brokering, so you don't have to pay the commission.
Our job is to educate them as to what's out there. If you're a $500,000 buyer, you want to see what 475 looks like. You want to see what 5 looks like. You want to see what 525 looks like. Usually you won't shop. There's usually not too many people price crazy at 550. Sometimes they're out there. Usually that means most people don't bother looking at that because they're wondering what the seller's thinking or what the realtor's thinking. If you price something so far out of the market, it's just, you got to get an education. That way, when you see the one, it's the right one. Let's go write the offer.
That's right.
And let's go through the offer. And you also need to know, before you start looking, what are my closing costs going to be approximately? What is my mortgage going to look like? And I want them to talk to you and say, all right, we're going to do a 5% down, or we're going to do 10% down. They're going to know those numbers, and they're going to know what they need to do exactly. And they're going to know about what their payment is. I talk to some people, and they're just like, I tell them what their mortgage payment is. They're like, how'd you figure that out? I tell this to the realtor sending me offers. And I'm like, your buyer's qualified to $500 with a $3,200 payment. Why are we arguing over this when we're priced at you got a 450 counter offer in your hand? We're like, how'd you figure out that payment? I'm like, I got an app on my phone, knucklehead. So
I got an app.
Anyway, you want real estate
for that.
Yeah, you want real estate done right. Check us out. Go to cleveloveland.com. Also Instagram, Loveland Cleve on that. And then we'll also help you out anytime you want. Thank you for listening. 407-352-8118. We got a couple more minutes, Bruce.
Yeah. If you've got questions for the loan arranger, you'd like to get started on your application. Maybe you're considering refinancing or purchasing a home, building a new home, renovating your home, debt consolidation, refinances. We're doing tons of them right now. Our interest rates are the best in the business. You've got one of the largest lenders. You got the largest lender and one of the biggest producers of mortgages right here in your backyard. Bruce Woodburn, the loan arranger. Call me now. I'm here to help you. 407-250-9144 or webringyouhome.com.
How much time do we have, Bruce?
We got about 15 seconds.
Okay. All right.
So
call me if you've heard some listings you like. Call me if you're thinking about selling. Call me if you want to work out a real estate plan. Call me if you're having trouble with your tenants. You haven't seen rent in weeks. Haven't seen late fees, don't know what your property looks like on the inside. Be happy to help you with anything you've got real estate. 407-352-8118.
Yes, and for the loan arranger, 407-250-9144. Don't get fooled by solicitations for you to refinance. Call me. I will make sure you got the best deal at the right time. Have a great weekend.